the management of Jupiter Wagons. We have Vivek Lohia, Managing Director, Jupiter Wagons, joining us. Good having you here, sir. Want to quickly understand, Vivek, what's the sense like? Is you've had FY24 very strong growth over FY23, but FY25 is looking slightly softer on a full year basis. Give us perspective on that and how the outlook is for the next couple of years in terms of growth.
Yeah, so thank you for having me here. So in terms of FY25, I think it is as per the projections which we had done at the beginning of the year. So FY24 definitely, because the base was much smaller, as you're aware that that was the period where railway released the biggest order in their history, and that's when all the execution and everything happened. So definitely I think for us to again go back to that kind of a growth will be difficult. But if you see, if you look at the trajectory, in terms of the order book and the growth, that has been pretty strong and consistent. So compared to last year, I think last year we had done a little less than about 8,000 wagons which we had supplied to the Indian Railways. Whereas this year we will be supplying close to 9,000 plus wagons. And going forward, we are looking at definitely to take this number up to beyond 10,000. And that is how where we see, the demand playing out at those numbers. Beyond that, it again depends on how strongly a railway is able to execute all the infrastructure projects which is in the pipeline. I think that would again determine going forward how the demand will shape up. But beyond again the freight numbers, all the other businesses which the wheel business which we had acquired, Bonatrans, that has grown close to 300% this year post the acquisition, and next year we are looking to double those numbers. And post that, once the complete integrated facility which we are setting up in Odisha that kicks in, then you are looking at revenues of close to 2,000 crore plus from that business, and a substantial portion of that will also be exports to the European market. So in terms of and also the braking business itself this year, we have already started supplying to Indian Railways as well as exporting out of those businesses. So I think all the incremental businesses are now going to start delivering, and that's where you are going to see the maximum growth coming in.
Vivek, so is there a slowdown in the order inflows currently, and would there be an event that could trigger some of the flows? Your order book is good, but has the last 3 or 6 odd months seen a slowdown? I hear some of your peers say that.
See, for us, as you are aware that a substantial about more than 50% of our order book is private. There we don't see any kind of slowdown. We have been accumulating sizable orders. So if you see our order book over the last 1 year, most of that order book has come from the private side. And going forward also, we see a very strong momentum because we are constantly picking up order books there, and we are in negotiations with a lot of players. On the railway side, we believe that this in the next 3 to 4 months, railway will come out with a sizable order book because again, as you may be aware, they had given a huge order book and which the deliveries are still ongoing. So the deliveries of the same will be completed in FY25. So we expect another round of order books to come in the next 3 to 4 months. But definitely in terms of size, it will not be close to that 70, 80,000 kind of numbers because that was railway had a very low base, so they had to build up the base. But the numbers will not be that big, but definitely it will be substantial.
Okay, and how should we look at Bonatrans? So, what was the revenue a year back? What have you 3x'd at? And where does it go from here? That's my first question. Second question is with regard to the facility in the east, which is going to get you 2,000 crore of revenue. How quickly does that come on stream, and how quickly does that revenue trickle through on your financials?
So when we acquired Bonatrans, it was doing a revenue of a little less than 70 odd crores, and it was a loss-making company. This year, I think we should touch close to 300 crores of revenue with 12% plus EBITDA. And next year, we are looking to double the same. And the integrated forging facility which we are setting up, I think that is in two parts. One is the axle plant and one is the wheel plant. I think the axle plant should be commissioned early or mid next year, and the wheel plant should be commissioned by end of 26. So that is what we are looking at. And I think from 27 onwards, and that's what we have projected also. From 27 onwards is when those revenues will start kicking in.
So can we say FY27 top line of roughly 6,500 odd crore? Is that a reasonable number to work with?
Yeah, definitely.
Okay.
FY27 is that is what we are looking at.
Okay.
And also you have to also understand that we are launching our ELCVs also in February. And there also we have got a very strong demand from the market, and also on the BESS, especially on the railway side, things have started moving. So those businesses also will start becoming significant contributors.
And Vivek, sorry, very quickly, 30 seconds. What should your margins be at that point as you grow? You're currently sitting roughly 14.5%. Sorry, yes.
Yeah, we are sitting at 14.5. I think we are definitely, again, very difficult to give, exact numbers, but we are looking at margins which are going to be beyond 14.5%, definitely.
Okay, fair point. All right. Okay, thank you so much, Vivek, for coming in and speaking with us. Always good chatting with you.
Yeah, thank you. Thank you.
Okay, now quickly moving on.